Hey folks, this is Colin Richards, president and founder of Lord & Richards, and today I'm excited to be with you once again on this episode of the Lord & Richards Show. Here's another statistic. In September of 2011, gold was at $24.43. In July of 2020, that's 9 years almost later, okay? 9 years later, gold was at $23.08. From $24.43, it was actually down 9 years later. We've seen this in the stock market, right? We can have entire decades lost. And the truth is that as inflation soars, right, we experience things that we're not used to, right? As interest rates soar, as inflation soar. And as these things move up and down, we're not used to the reality that bonds, for example, traditional safe haven, no longer become safe when we have these things moving like interest rates. Do you remember in 2022 when the bond market dropped as much as the stock market? Everybody's shocked? You shouldn't be. It's happened over and over again. It happened back during the 2008 crash. And so these traditionally safe vehicles are actually more volatile than you realize. So like every other asset class, gold, oil, these things can be incorporated into a well-diversified portfolio to mitigate the shock that can occur in a single asset class or commodity, especially. The best way to use gold is as part of a principal protected strategy. I can actually show you a way. Now, this is pretty cool. I can show you a way to take advantage of the rise in gold without participating in the losses. You say, oh, Colin, you sound like a snake oil salesman. Don't say this kind of stuff. It undermines my confidence. No, it's real, okay? My clients are taking advantage of it right now. You can see for yourself on the internet the experiences that our clients have been having as we build into your portfolio a portion of the money that's designed to remain safe from all kinds of crashes, whether they're commodity crashes, stock crashes, bond crashes. We want to have on one side of what we call a barbell, a term I borrowed from Morgan Housel, who's written a fantastic book you should pick up, The Psychology of Money. And on page 143 of the print edition, you'll read about his own decision to barbell his money and how he has interviewed and gotten to know and advised some of the highest net worth people on earth. And Morgan Housel talks about this barbell where one side of your money, we're pretty paranoid about the short term, right? About what can happen in the short term. And then the other side of the money, you're pretty optimistic about what can happen in the long term. And so in my next segment, I'm going to talk to you about how to use the market properly, so you don't expose yourself to these unlimited downside risks. And the answer, folks, although I believe in diversification, the answer is not diversification alone. If diversification is your only strategy, it's a failed strategy. When we see multiple asset classes that are not supposed to be related to each other go down. And it happens all the time. Folks, we do this as part of a comprehensive plan we call a retirement freedom review. And it is our joy to provide this at no cost to you. It's simply a conversation where we sit down and you share your goals, dreams, and values with us. And then we help map out, based on the information you provide us, your readiness for retirement. And this is a scientific process that I've almost seen nobody else take their clients through. Folks, this is unique. And by the way, it's underpinned by biblical principles that have to do with investing, risk, and your involvement in the kingdom of God. As a believer, we want to invest in things that have eternal value, in people, in the kingdom of God, right? But we also need to have an earthly portfolio, and we need to recognize that rust and that moth and that thief comes in the form of volatility in our markets. In my last segment, I talked specifically about gold, which tends to be where a certain segment of our population is inclined to flee. And it's almost as if blinders come up, right? There's no logic anymore. And people don't realize the long-term historical average of gold is 4.47% since 1980. That's just a little over 1% inflation adjusted. But here, as I'm talking today, gold is down 12%, right? But tomorrow it could be up 20%. It's an extremely volatile asset, and it should be part of a diversified portfolio, just a part. But another approach that we can use with commodities, which are more volatile, including gold, oil, other precious metals, and so forth, is to use the barbell strategy that we talk about when we develop your financial plan, which we call a retirement freedom review. It's all about knowing that at the end of the day, when you retire, you will not run out of money. You will not be experiencing poverty and lack. You'll be experiencing abundance, that you're prepared for even extraordinary expenses like extreme medical costs, like chronic illness care, which is the number one cause of bankruptcy. You say, well, how can I do that? Well, one of the first principles is we want to manage risk as a steward. This is a core value of Lord & Richards. And although we're very comfortable with placing some of your assets at risk, we would call this the optimistic side of a barbell. If you imagine a weightlifter with a barbell and weights on each side, one side, we're going to be very optimistic about the future, right? We can place at-risk investments there. We just build a plan so that you're not dependent on them, right? They're about accumulating and building wealth in an at-risk portfolio. And by the way, as long as we're going to take risks, let's get some of the best investments on earth. Let's invest in some of the best companies, and let's not worry about the short-term fluctuations. But when we're talking about building a plan that you can live on, we need to have another side. We need to have that side that's protected and growing, that side where we can take advantage of the rises in the markets but not participate in the fall. And this is the pessimistic side of your barbell, which really has to do with short term, right? What can happen in the short term, like gold dropping 12%, like the markets dropping 40, 50%, as we saw in 2008, or 25% for both stocks and bonds in 2022. People who retired in 2000, 2007, 2011, or 2022 all suffered major setbacks in their plan if their retirement savings did not have this side of the barbell. And by the way, this side of the barbell, this paranoid side, right, which deals with fear, this side is the side we're going to live on, right? If you take your income from this side, you're not going to worry because we're going to put a floor under your feet. We're going to protect you from the downside of the market. You say, well, how does that work? Well, imagine a goose that lays a golden egg, will you? I know that's a silly fable, but if you had one of those, let's just pretend you had one down in your basement. You had a goose and it could lay golden eggs each year. You get one. Which is most important to protect, that goose or the golden egg? That's a tough question, but in the end, I would say, well, if my egg is renewable, I get another one, and my goose is non-renewable, I don't have another place to go buy one, then I'm going to make sure I never risk my goose. And I would say you're right. Think of a CD, an old-fashioned certificate of disappointment, as I like to call them. It's really safe, isn't it? Right? We put our money in. It's even backed by the Federal Deposit Insurance Corporation, and it gives us a low guaranteed yield, let's say 4% this year. That's your golden egg. Well, since we got so conservative with your principal, we put it someplace safe, how about we take your golden egg and we just risk that? So instead of just having a 1-to-1 ratio by taking your principal and putting it in the market, watching it go up, watching it go down, what we're going to do, step number one, is we're going to get your principal safe. Then we're going to take that low guaranteed yield, the egg, the golden egg from your goose, and we're going to leverage that. We're going to buy highly sophisticated leverage financial tools that can actually lose all of the money we use. But remember, we're only using the golden egg. We're protecting your principal, the goose. And that golden egg is going to be linked to a stock market of your stock market index of your choice, say the S&P 500 or any of a variety of indices. And when that index goes up, you get some of the up. And when the index goes down, you lose all of the egg. But your principal is protected. So we get some of the up, but we don't participate with your principal in any of the down. Elevator goes one direction, up, never down. You have a floor under your feet. That is, your minimum return in any given year, if the market goes down, is a zero. Not minus 20, not minus 30, not minus 40, not minus 50, zero. And yet you still have powerful growth opportunity linked to the market. And that, by the way, we can do that with gold. We can do that with other commodities. Folks, these kinds of strategies and more are awaiting you. If you want to join the thousands of people that Lord & Richards is helping today, I would encourage you to pick up the phone and give us a call. We're going to conduct a retirement freedom review so that you can know for sure that you and your loved ones are protected and enjoy the retirement of your dreams. It just starts with a phone call.